Tonight, on Legislative Review. The House debates the Senate proposed capital gains and estate tax bill, and one that eliminates outdated tax breaks. You're watching Legislative Review. Thank you for watching Legislative Review. I'm Angela Nolasco with today's top discussions in the state legislature. State representatives held contentious debates over several Democrat-proposed tax bills Wednesday evening until the early morning hours of Thursday. Senate Bill 5813, or the capital gains and estate tax, is a new bill that would raise taxes on profits over $1 million, like from selling stocks, by nearly 3%. Passed in 2022, the capital gains tax was designed so that its first $500 million in profits goes to education and early learning each year. The estate tax, which kicks in when someone passes away and leaves behind assets, would also get a major revamp under this bill. Estates under $3 million would pay less, but those over $12 million could see a top rate of 35%. Speaking in favor of the bill, Democratic Representative Chipalo Street said it will diversify Washington's tax code.
This is a relatively simple bill that adds a new tax bracket onto our capital gains tax and then modifies the rates in our estate tax and makes sure that the exclusion in that estate tax is indexed to inflation. These are taxes that our population is familiar with, and we are just making slightly more progressive so that they can fund all of the great services that the state provides, like schools, healthcare, higher ed, early learning, and public safety.
With staunch opposition, Republican Representative Jeremy Defoe criticized the bill, saying it's an income tax in disguise.
A capital gains tax is an income tax, and it's unconstitutional in this state per the Washington State Constitution. Justice Cheryl Gordon McLeod said that in the decision, and I'm quoting that right now, to point out that what we're doing here is unconstitutional, Mr. Speaker. This bill is unconstitutional. Mr. Speaker, we're going to have property owners, retirees, getting their wealth taxed out from underneath them in a way that was never intended under the original legislation that was promised, including on this floor again, that is not the intent or the idea of the underlying legislation.
The House voted on the bill.
The Speaker has started the roll call machine. Has every member voted? Representative Barkas, how do you vote? Does any member wish to change their vote? Speaker is about to lock the roll call machine. Speaker has locked the roll call machine. The clerk will take the record.
Mr. Speaker, there are 53 yeas, 45 nays, 0 excused.
Having received a constitutional majority and gross substitute, Senate Bill 5813, as amended by the House, is declared passed.
It now goes back to the Senate for further review. The House debated another tax bill proposed by Senate Democrats to help address Washington's budget deficit, this time aimed at cleaning up Washington's tax code. Senate Bill 5794 rolls back several of what advocates call old or outdated tax breaks. The bill proposes to eliminate a range of tax exemptions and special rates, including some for credit unions, international investment firms, prescription drug resellers, and sellers of gold and precious metals. Many of these breaks were put in place years ago, but are now considered obsolete or no longer effective. The bill follows recommendations from a regular performance review process, which looks at whether tax preferences are meeting their goals. If passed starting in 2026, more businesses will pay standard business and occupation or B&O tax rates, and some industries that used to get a break, like storage unit rentals, will now be taxed the same as others. For example, sales of precious metals like gold and silver will no longer be tax exempt. And companies that rent out self-storage units will now be taxed, even if a customer rents the space long-term. Supporters say this helps simplify the tax system, close loopholes, and ensure everyone pays their fair share. Speaking in favor of the bill, Democratic Representative Chipalo Street.
You've heard about many of the great public services that are funded by our taxes, like public schools, healthcare, higher ed, early learning, and even public safety. One of the hardest things that you and I have to do is balance robust funding for those services, but also not overburdening our Washingtonians and businesses with taxes. At the end of the day, tax preferences fight for that same tax funding that these other really important services rely on. And so I asked myself whether I'd rather put money towards reducing the cost of buying a commodity metal, or funding public safety. I asked myself, would I rather put money towards lowering the cost of title insurance or ensuring health care for everyday Washingtonians?
However, opponents, like those in the coin and precious metals and self-storage industries, argue it would drive them out of state and lead to higher costs for certain services or products. Speaking in opposition, Republican Representative Jim Walsh.
Mr. Speaker, we need to look at our tax policy as an organic whole. And when we look at it as that, it is evident that this grab bag of business tax increases and personal tax increases will hurt the state and hurt the people in it. We've got to stop hurting business and people in this state, Mr. Speaker, and that means vote no.
The House took a floor vote.
The question before the House is final passage of engrossed substitute Senate Bill 5794 as amended by the House. The Speaker is about to start the roll call machine. The Speaker has started the roll call machine. Has every member voted? Representative Paul, how do you vote? Representative, okay. Does any member wish to change their vote? The Speaker is about to lock the roll call machine. The Speaker has locked the roll call machine. The clerk will take the record.
Mr. Speaker, there are 53 yeas, 45 nays, 0 excused.
Having received a constitutional majority, engrossed substitute Senate Bill 5794 as amended by the House is declared passed.
Senate Bill 5794 was amended in the House and would need Senate and Governor approval to take effect. The proposal contains multiple effective dates. If enacted, most changes would kick in either in January or April of 2026. Unless bumped by live legislative coverage, you can always watch Legislative Review nightly at 8 and 11. And don't forget, we're also on YouTube, and our audio version is on Spreaker. That's it for this episode of Legislative Review. Make sure to join us nightly at 8 and 11 for your highlights of the state legislature. And follow us on social media. Have a good night.